All right, everybody, welcome to session 2.6. This is the last of the tax unit. And actually, the stuff we're going to talk about today in this session isn't really about taxes per se, but it's a nice chance for me to bring your awareness to some other regulatory issues around charitable organizations. So we're going to talk about the requirements of incorporation and also the concept and requirements for qualifying to do business in other states, which is something that charities have to deal with if they're operating in multiple states. I want you to know and understand the concept and requirements for business licensing in municipalities. And then we're going to talk about something called charitable solicitation registration. And so if you're a charity soliciting donations, you have to register in multiple states if you're fundraising there. So let's jump into these. I have these roughly broken up into home state requirements and then other state requirements. And we'll take care of two of those bullet points just on this one slide. The way corporations work at the state level under state law is that they exist only because the state says that they exist. You have to go through the steps to create your corporation. And we learned about that when we talked about articles of incorporation back in Unit 1. You also have to maintain your corporate registration, or in this case, we call it your corporate charter. The charter being the official status from the state that your corporation exists. And pretty much every state wherever you might choose to incorporate, requires you to renew your corporation once a year. In Utah, the way it works is you get a little postcard in the mail that has a link and a sign-in code, and you have to pay a fee to make sure your corporation is still active. If you fail to renew by the due date, then it goes into a probationary period. That's a couple months. And then if you don't renew within that time, then just automatically by force of law and the calendar, your corporation dissolves. This is a frequent mistake that small organizations make. They'll set up and create their organization, so they go through the steps on the Utah State website to incorporate their nonprofit. So their corporation is set up and started, but then when that little postcard arrives in the mail, it gets lost in the shuffle, or the person in charge of it isn't paying attention to the dates. And then what ends up happening is they lose their corporate registration, their corporate charter, because they never actually went through the process of renewing it. And so it's important to pay attention to this process. The state legally requires it. On renewal, you also have to update information of any directors and officers and so on. But if you're not doing this on an annual basis, you will just automatically lose the nonprofit that you're working with. Its corporation status will cease to exist. So make sure you're following the annual filing requirements to maintain your corporate charter. And then wherever you're operating, you also have to have a local business license. That's not necessarily true because it depends on the city or the county where you're operating, but the vast majority require business licenses. Now, this might seem confusing because a charity is not a business, but the reason that municipalities require this is to make sure that you're in compliance with zoning laws, or that they can make sure they're paying attention to you for local tax purposes. There's sometimes a filing fee to obtain a local business license, but you can get that fee waived if you're a charity in most municipalities. And this is usually also an annual filing. So make sure that you're paying attention to that one too. This is anywhere where you have a physical location. Okay, let's start. Let's talk a little bit about operating in other states. Generally speaking, if you're going to go do business in a state different than where you're set up. So let's say you're a Utah nonprofit corporation and you want to do business in Arizona. Then you have to register in order to do business there, to operate there. And this is a registration requirement for any corporations that have been incorporated elsewhere, but then operating in a particular state different from their incorporation. Multi-state companies like The Gap, for example, is qualified to do business in all 50 states because they have stores in all 50 states. And so they have to go through this registration process of qualifying to do business. The requirement to do this depends on how deeply involved you are in your activities in the state there. Like, how substantial are those activities? So, for example, if you have a bank account in that state, then you have to qualify to do business there. If you have an office location or other physical presence, you have to qualify to do business there. If you have employees who reside in that state, sometimes you have to qualify to do business there. It depends on the state. And then there's a sort of fuzzier or blurrier threshold about a degree of substantial commerce. If you're selling to a bunch of customers in a given state, the state may require you to qualify to do business there. Now, states require this filing for a number of reasons. They want to make sure that out-of-state companies are respecting the laws of the state. It helps track them for tax purposes. It helps them track them for regulatory or legal purposes. Another thing is it requires you to have a registered agent in the state where you qualified. So that way, if somebody needs to sue you, they don't have to file over in the state like Delaware or whatever. They can serve process of the lawsuit on a registered agent in the state of Utah. And by the way, this also is what allows your corporation, nonprofit corporation, to use the courts in that state. So you can also now be a plaintiff if you need to be using the courts of the state where you qualified to do business. All right, so that's qualifying to do business. And then this next one is similar, but it's different in important ways. So don't confuse these two. Qualifying to do business is one thing. Registering to solicit donations is a separate registration process, one that's required in most states. Last I checked, there are 40 states that require charities to register before they can solicit donations there. The registration process is an annual one in most states, and each state has an individual set of requirements that are unique to them, and I'll show you an example of that in a minute. This is an onerous process. I did this as an intern for a nonprofit called Grameen Foundation USA when I was in law school. And it took me 3 weeks of full-time work to complete all of the state registrations. It was a ton of work, and that's why back in the mid-2000s, a National Tax Journal article estimated that it costs nonprofits, if all nonprofits are doing this, it would cost about $1.1 billion every year, or about $4,300 per charity, to do this annual registration in all these states. Now, there was an opinion of a group of state attorneys general that said that a website could give rise to nationwide registration. So if you have a website soliciting donations, then that could be enough to require you to register in all the states where people are accessing your website. And so it's important to know that even a website could give rise to the requirement to register in these states. Now, the reality is this: most charities are not complying with these laws. Most charities have not done nationwide registrations where required. A lot of charities haven't even done local registrations, like in the main state where they've incorporated or operating. And the reason is because these laws aren't widely known or understood. And this is why pretty much every state, the office that enforces these requirements has a two-strike rule, meaning the first time they catch you, they're going to make you register. The second time they catch you, they might punish you. And the punishment can be serious if you're not paying attention to it. In fact, in Utah, for example, it's a Class B misdemeanor for every day that you solicit donations without registering. And by the way, that's not just the people who are soliciting donations. That includes your board of directors and your officers. So you don't want that to happen to you. How do you do this process? Well, one way you do it is by going to all the individual state enforcement agencies, downloading forms from their website. This is time consuming, and it's also problematic because different states have different offices in charge of this registration process. There's a website called multistatefiling.org where you can use something called the URS, the Uniform Registration Statement. The idea behind this was a really smart one. Let's create one form that could be filed in all these states. The problem is most states have unique requirements in addition to the URS, so it sort of loses its full advantage. It's a little bit less redundant, but it's still not great. So what often happens is people will hire law firms to do this for them, or accounting firms to do this. And this can be expensive. It can cost anywhere from $7,000 to $12,000 to have a firm do nationwide registration for you. But if you're a larger nonprofit, it's worth every penny, because then you just don't even have to worry about it. So the last thing I want to show you here. So this is a screenshot of a tracking table that I set up the summer. I had to do this for Grameen Foundation. And it's because different states had different filing requirements. So the states with the check mark had a fee for filing there. So you had to pay a fee to register to solicit donations. Those other ones I checked have a unique state form that you have to use in addition to or in substitute of the uniform registration statement. You have to include copies of your IRS determination letter for these ones. If you have contracts with professional fundraisers, you have to send copies of those contracts. You have to include copies of your bylaws for some states, your articles of incorporation for some states, your 990 every year you have to send over to them. In some of these states, if you're above a certain threshold, you have to have a financial audit performed by a CPA and send them a copy of that audit, of your audited financial statements. And then back then, and there's still a lot of states that require this, the signatures on the form have to be notarized. And in some of those states, it has to be the CEO that signs the form. And so imagine being like a larger nonprofit existing, and now you got to drag the CEO in front of a notary and have them sign, 25 different state forms and have each one notarized. It's absurd. You can tell I have a lot of animosity toward this because it's a set of state laws and there was another study that was related to this that showed that there's really not any consumer protection benefit. That's the idea here, is that requiring charities to register before they solicit donations is protecting people from rogue solicitors who might be lying or cheating or whatever. But the reality is those people do that anyway. And so the registration requirements only become a burden for the good ones, not the bad ones. And we do great if every state would get rid of these requirements. But there's not an incentive for them to do that because doing that makes it look like they're not protecting the people in their state. So anyway, we've got some questions we'll discuss whether or not states should be allowed to reach other states' entities. And there's some interesting constitutional questions there. And then we'll talk more about the solicitation registration. And that's this recording. It was a short one. And I'll see you all in class.